let's start with Volodymyr. So, Volodymyr, first question. So what's the latest and what's the central bank forecast for this winter, the next year in terms of energy situation, and then how's might affect the economy? We understand that if Russians will destroy the all energy infrastructure, I mean, doesn't matter what we're forecasting. But assume that we are where we are. So what's your view on that?
Yeah, thanks. So the actual situation was better than we assumed. Of course, we are not energy experts, but we are gathering a lot of information from different sources in order to form our assumptions, which is of course not forecast. It's our assumptions about the energy situation because it affects economic activity and inflation as well, which belongs to our mandate. In July, the situation was close to what we expected, but in August, it was better, much better than we expected. And probably we will, of course, we will issue our new macroeconomic forecast in October. We will take into account all the factors which will appear up to the date. But for now, it seems that there are two factors. One is our energy sector is outperforming our expectations because there are clearly lower deficit of energy than we assumed. And given that we will have this stable situation, which is quite naive to assume in this, no additional attacks on infrastructure, we will be having better situation in terms of energy deficit. Of course, there will be some in winter time. And the second aspect is that we have better adaptation of business compared to what we assumed. The real burden for these shortages is for households. Like business is more adaptive. Business has its own capacities to produce autonomous sources of energy and import, and then have uninterrupted supply. And because of that, we actually seen quite good economic activity in the third quarter. On the balance, I think our forecast for having 3.7 GDP growth this year is quite, let's say, conservative assumption. It could be even better. But you know, we are in complete uncertainty about the further attacks by Russians.
Interesting. And for this, okay, so now looking ahead also for I mean, there's a lot of worry about Q4 and Q1. And we know that, June, July, August, the energy situation was better than expected, like you said. But then as we move into the winter, what are your thoughts? What are the central bank's thoughts as December, January, February, the heart of the winter, and business resilience?
So in terms of business resilience, we could be quite optimistic.
There's a lot of people who will truly understand me. Ukrainians understand, or businesses, look, the only person I can rely on is just myself. Okay, if the business struggles and we have 4 or 5 months before the winter, we need to get the stuff. I mean, look, because government, for example, government can say, guys, we'll do our best. But government cannot tell, will we be able to protect the rest of the stuff that we have? So what they decided, and we speak to the business all the time, it's like, no, we got our units and this gas equipment that is providing all the generating electricity for our plant, and we are safe. If the government actually supplies enough electricity, we're good, but we have a plan B just in case.
Yeah, but the role of government and actually the NBU in this process is to provide sufficient funding for this, and we are quite active in promoting this project of. And banks are now competing for the lenders to borrowers, for borrowers, sorry, which are going to have their energy projects, and what currently we have is about 100 megawatts of projects which already financed by banks. And that's progress that we have during just 2 months, which we started tracking this. And this is actually improving because the last figure I recall is about 4 billion hryvnias of approved
financing
for the
from
energy
banks
for energy projects, aside from these projects for households.
Yeah, because
So, Oleksii, if we can turn it to you and hear some of your remarks. So, firstly, anything to comment on based upon what Volodymyr shared, and then further topics about forecasts from the Ministry of Economy and labor market. Any topics you'd like to go with?
Good. No, we're in constant dialogue with the National Bank of Ukraine. There's a budget process going on. We're going to update our macro forecast also during the next, I guess, in October, definitely. And I guess we're in line. Right now, it seems that we usually, Ministry of Economy would be on the more optimistic side of kind of GDP growth. So our assessment would probably be higher. And the last year, it happened like that. Right now, we think we're kind of in the middle between different agents, like the National Bank, us, experts, IMF. So we're in the middle to a bit lower margin. But in general, we all agree. So there's going to be growth next year. Right now, the preparation for the winter is good. This gigawatt, and we actually run some of the programs that was mentioned for 100 megawatts. So some of them are financed through 579, and we're also working very hard with the banking community and business community for them to be able to get the funds sooner and to actually install the equipment and get through this winter. But the next winter is also important. So a lot of these projects, they're going to come online next year, or there are projects in the pipeline that should come online next year and the years after that. And with that, what we would encourage people to hear maybe from us is that we feel that there's a need for more projects. Right now, the banks actually are competing for quality lenders. Quality of lender, it's also impacted by the war, right? So the assets that you have, that they had, and there are a lot of different circumstances that do that. But what we also know is that there's sometimes simply not enough projects. And what we feel, we're in charge of Ukraine facility, which is this EU investment program. If you Google online, there's a Ukraine facility handbook of all the different programs that already exist with this EU money, and more money are coming towards Ukraine next year for exactly investments. So they work through IFIs, through Ukrainian banking sector that provide additional guarantees to businesses and cheaper loans and technical assistance. There's going to be project preparation facilities, meaning the groups of people and consultants that help to kind of finalize and prepare the projects. So we get more projects, so more could be financed next year. So just a view on our side, the macro side, that the money are coming. So basically, what we encourage all the businesses to do is to prepare more projects and communicate to us the problems that you experience with realizing them. Some of them would be kind of unique. Some of them could be general to the sector. And we're trying to get the resources and funding and coordinate the donors and us, and I don't know, deregulate if need be, so you could invest faster and more. And one of the topics, of course, that the businesses there are two topics that every business in Ukraine would mention during the meeting: energy and labor force. Right. So energy, we covered part of that, and I also agree that we see businesses. So we were in Odessa recently, or in Kherson, and they say, how are you preparing for the winter? They said, we're more or less set up. So with the generators, it seems that there's definitely a lot of capacity, that they will continue to operate with like lower margins or even like not make a profit, but still will be operating. But for the labor shortage, this is an issue, and how we deal with that. So there is a big reform of the labor code coming. We're working, my colleague Tatiana Berezhna, Deputy Minister, she's working on the new labor code with different associations, with the parliaments. This is, the country right now runs on the labor code from 1971, so probably we need to rewrite it completely. And this is like what is actually happening. And it would be more flexible. I think it would be kind of pro-business, but also we need to understand what type of social security we could actually employ. But if you look at the policies the ministry is doing, so we repurposed part of the money, unemployment money, into the grants that stimulate entrepreneurship. So basically, not just pay people because they're out of work, but provide them grants so they can set up their businesses. And this is actually very successful. And there are tens of thousands of people, like more than 30,000 people that have these grants. So like the similar approach to making market more liquid will be, I guess, in this code. And the other part is that we're, with our donor partners, we're launching like really big retraining programs. And I think this is what the businesses want and what they're thinking of launching. Some of the businesses told me, we can't do it on our own. We need a partnership. So like the funding comes. Some of the programs were already launched for several, for different like sectors. But it is called Skills Alliance that we have with like 7 or 10 different countries and a bunch of international organizations, and like billions are committed already to be spent across the next 4 years to do that. So basically, through business associations, I think it would be good to approach us to exactly structure these programs so we could work together with donors, with businesses, to retrain people where you actually need them. Because yeah, this is a big issue for the whole country.
Okay, I will follow up with that on what does it mean. So the labor market you addressed, obviously that's one of the biggest pressures, but then turning this into demand. The other positive side, the extreme wage growth obviously helps drive the purchasing power. So what can you talk about as far as, consumer spending has been driving the economy since the full-scale invasion. It should continue to drive the economy next year. Any comments on how, when you factor in the costs for businesses, ability to cover costs, but that high wage growth, and then, inflation and impact on consumer spending?
Well, I'll start on inflation, but the National Bank is obviously a much better position to comment on that. So we forecast inflation below 10%, like 9 and something, throughout the next year. We see the wage growth right now happening. It is healthy. We think like we don't find like bad repercussions on it, but because the market is of course tight. So this is in Ukraine plan, for example. This is like our 4-year macroeconomic program, and there's a forecast included. So after the war ends, in the first year of the war, we estimate, we model 2 million people returning, and they need to be retraining. So there would be very different dynamics in the labor market there. And but nobody knows, right, where this is going to happen and how. So what we feel, the businesses need to adapt to both scenarios. But I think what we're launching, the retraining programs, they will not go away. Like whether the people return next year or the year after that, or it takes some more time. So there would be a need for that. So basically, expanding on this infrastructure, I think is very, very important for the economy in general and the businesses. Where
you said 2 million, hopefully you're modeling 2 million coming from abroad. What about Central Asian workers, Turkish
Yeah,
workers?
we see businesses doing that. How the government looks at it, and some of these discussions around it. This is like very political issue, and I don't think that we have the answers. Like neither any of us in the room, because this is like whole Ukrainian issue that we need somehow to come to an agreement to, right? Maybe this is not the time, but the questions are definitely there. The government will adopt the demography strategy, because this is one of the indicators of Ukraine plan, just next week. So it has been quite public in the discussions, like the ones that follow up. But what I would just want to say is that sometimes people discount this whole strategies that the government adopts. I think right now it's a bit different kind of beast. Why? Because this is a part of EU integration process. Many of those documents, they have some role to play in EU bureaucracy, and we have to adopt them, and then we have to kind of make them actionable and actually implement them, which means that like they are not just the strategies for the sake of the strategies. So basically, if you're interested in this discussion about the labor market and demography strategy and what the projections, how the government is thinking, and who could come here and why, and like how many Ukrainians will return. So what's the current status of like the government position on it? So you look at the demography strategy, and it will be there. So it will be adopted next week, and it will answer some of the questions, but it will give the business possibility to plan better.
Yeah,
so I think that's what
planning.
we're trying to achieve.
More confidence in
But
planning.
besides all that, I'm sorry, let me comment on that. Like logically, if we're not getting into all these complicated schemes and how government have to approach that, what they should implement, but think about it. I'm just sharing something that I always always believed. If there is a person left Ukraine and working in Poland, making $1,000, out of this $1,000 or €1,000, he pays $500 or $400 for his apartment, and then he doesn't have relatives, he doesn't have kids with him. And if, for example, Ukraine can offer, I would say, typical regular jobs at $1,000 a month, I'm just assuming, right? It's going to be simple. People would rather be home with their families, loved ones, kids, parents, living in his apartment that he left and making this $1,000. Like, I mean, but
and cheaper cost of living.
Exactly, cheaper cost of living, because people don't, oh my God, I'm going to go to Poland, I'm going to make $1,500. But when they arrive, it's good to visit for 2 weeks and spend your money. But when you spend next year and you realize, oh my God, I mean, that was twice cheaper in Ukraine. Oh, I didn't have to pay for that in Ukraine. And then they calculate, oh my God, out of the $1,500, I have only $100 left. So there is people, and I've seen people like that who already came back to Ukraine after 1 year, and they was like, no. I would rather make $800 in Ukraine, for example, in Zhytomyr and Rivne, than this $1,500 somewhere in Poland, and you have to pay for the documents, et cetera, et cetera, et cetera.
Yes, Oleksii, thank you.
Chris?
Oleksii needs to go, but okay.
Yeah.
Appreciate it. Maybe your questions will be relevant for Volodymyr.
Thank you, Oleksii.
Thank you very much. Appreciate it.
Volodymyr, can you make any comments on capital controls? Do you have any updates? Because what I heard recently, there was recent updates that the companies can pay up to €1 million in dividends to the companies abroad. Like any comments on that?
Yeah, sure. There is companies are actively using that possibility. That's accounted in our forecast that companies will be using that, and currently our liberalization measures, the biggest package of these measures we done in May this year. And now we are approaching, like, there are 3 stages, of course we are not quite detailed, we were not publishing quite detailed information about what consists on every stage. But what is, we are moving from most painful measures for the business to complicated and challenging stuff like futures and so on the 3rd stage. So we made quite good progress we seen the demand which was created by these liberalization measures, including dividends. We are assessing how it will go, and we have no calendar plan. Like our job is, our mandate is to keep situation. Part of our mandate is to keep situation on the FX market stable, given that we have limited amount of international reserves that we could sell on the market. So we need to be pretty sure that after the second, next round of liberalization measures, we will not create kind of uncontrollable risks to the system. So that's how it goes. So I could not announce preemptively what will be next. Of course, I know the business associations are quite vocal about what hurts them the most, and we are hearing it. But yeah, I could not make promises.
Yeah, yeah.
Okay, but further relaxation over time, I mean, that's the continued strategy. But this is occurring during hryvnia devaluation,
Yeah,
so...
definitely. We have like long-term goal of joining EU. And in EU, there is no like capital controls anywhere.
Right.
So, but the timing when we arrive there, it's uncertain.
Yeah. No, we understand there is no promises, but this is what truly dealing with. We meet with investors and we talk about, we have great opportunities. We have great investments. And that's the first question we get. What about how we're going to get the money back? And there's like, okay, your project's a $50 million project. How am I going to get my money back? I mean, you'll show the profits, but if the money is in Ukraine and for God's sake, if it's in hryvnia, it's going to be devaluating, and we instead of making 20% of profit, it's going to diminish to 12 or 13% profit, and we're not going to be able to get the money back. So that's the biggest issue. So now, when the situation started improving, so people, okay, so if I can pay 1 million euro in dividends, which is 12 million euros, or approximately $14 million so this is a totally different story. So now they kind of, all right, so if the government is making that step further, so we have hopes, so it's going to continue progressing toward that way.
Yeah. So that's, we're trying to minimize the risks that we will go into impose new restrictions because it will be like a sustainable situation. So if we are going on this way, so we need to be sure that we are quite clearly could develop, could give the message that we're going to make a progress in this to this end.
And to change topics then a bit more. So, I mean, the risks we're hearing, right? Labor market, electricity situation, and then externally, which you can't really control, also relates to external funding for the budget, for the military, for next year. Any comments you have on that related to IMF, EU, US?
So we're always trying to be on a safe side in our forecasts. So during our July's forecasting cycle, we produced a forecast which we had in this forecast, we had this ERA mechanism, this $50 billion from G7. We put it as an upside risk to our forecast, but not the baseline.
Okay.
Now probably we will include this money as a baseline.
Good.
And actually we agreed with IMF that this money will be in the perimeter of the program. So that's quite like promising signal. And actually, while forecasting the budget and our international reserves for the next year, there were concerns about how we will get sufficient international financing. Now we're less concerned about it because there is like some clarity about the mechanism and timing.
Okay, and then last question from me, unless there's something else, and then the audience. relates to national bank. I mean, as you heard, Oleksii was talking about different programs. Ministry of Economy is supporting the central bank. How are they trying to support the recovery? We've seen the interest rate cuts, obviously, so that's supportive. What else can you talk about? Maybe moving into next year to help sort of.
The best what we can do for the economy is to create some certainty about the inflation and FX market dynamics, and we are quite trying to make sure that everything is under control and that expectations are under control, and that creates some certainty. Besides that, we are living in uncertain times. Other than that, what we are doing, it's we clearly understand that, of course, fiscal needs are outside our mandate. We are like independent central bank, but the acute needs of the budget are related to financial stability, which we are concerned. You know that recently there was increase in expenditures of the budget, mostly for military needs for this year, and how we can make our contribution to it. We're using our monetary policy instruments in order to stimulate the borrowings from banks on domestic government bonds market. So we used our reserve requirements. We have some experience in using this instrument, and we're quite sure that we will be able to stimulate banks to buy additional government bonds and to finance the need for this year. And by doing that, we are minimizing the chances that government will come to us for monetization, which is direct risk to the monetary system. Additionally, what we are doing, to stimulate loan activity for the banks, you know, that we have special strategy for that. It's not a strategy for our own. It's our common goal between regulators, government, and the national bank. And there are quite promising signs that banks under these circumstances, given that situation on the FX market is controllable, that inflation expectations are under control, and we have quite low interest rate compared to what we had like a year ago. The banking lending activity is reviving, and there is quite significant growth in loan portfolios of banks.
And this is what we've seen, that National Bank of Ukraine posted just recently, that the lending increased by, I believe, 22%, and it's mostly because of the 359 programs, because businesses are going to the banks and lending the money, and consumers as well. So this kind of comparing to 2022, we talk about like the war years. It kept on growing, but at the same time, I mean, the banking system, they heavily taxed, right? So as of today, we believe it's still 50% on their profits, correct? Yeah. And do you any ideas on, I mean, how long it's going to stay? Because banks are concerned, but at the same time, from one banker, we heard, look, we understand it's a wartime. This country needs the money, but why just banking? There is a large businesses, like for example, we talk about consumer goods, right? ATB, Silpo. I mean, they're making killing profits. Why these companies actually are not taxed as heavily as banks, or why banks are taxed that heavily compared to others? Because they feel like, why us? Why us?
Actually, the National Bank was one of the proponents to impose this windfall tax on banks last year, when we even proposed to impose it retroactively, because there was a reason, and that was like one-off. But we need to be consistent. Like if it's one-off, it should be one-off, and it should be proportionate. Like if there is like of course, it's easy to say banks have money. They always had. So, but we need to be proportionate, and we need to be to preserve the consistency of overall economic policy. So there are a lot of demands for banks, like they need to support the government bonds market, they need to activate their loan activity. At the same time, they need to pay much more than other sectors. And that's kind of in proportionate burden for banks, I think.
Yeah. Any questions?
Yes, please. And please introduce yourself.
Okay. Hi, my name is Jeffrey Joseph from the U.S. Embassy. Thank you so much for your time. My question is, I know that there was a plan ongoing about war risk insurance that the National Bank was involved with. I was curious if there's any update about the National Bank's efforts to sort of create a broader system for war risk insurance to support investment and businesses. I know that was something that has been ongoing for a while. Thank you.
Yeah, sure. It's one of the points when we're making a lot of effort together with the government. And I think we got a lot of success on that. There will be more news, I think, forthcoming, but I'm not really the person who can comment on that.
I have a question, and of course about money. It's not a secret that Ukraine receives financial aid between 3 to 5 billions per month, right, in order to live. Within the National Bank, is there an understanding for how long the country will exist if there is no such aid? Because if it is able to operate for 12 months, this is a good sign. But if only for 3 months, then we are done.
It's a great question. Why? Because maybe a plan B, for how long it, like, for example, tomorrow Trump comes and says, guys, cut it off. I don't know who these people are. Just, they're too far. Bye. What are we going to do?
I think we proved that we could manage to live quite substantial time without international support. But like there was periods you could really recall in your memory when there was like international reserves of the national banks were on downward path. There was no like good news in terms of the U.S. help was suspended, and so on. So we're quite good at managing to have these long pauses in international help. But international help for us is vital because otherwise we are not able to cope with our own resources. It's like the scale of Russian economy and Iranian economy is incomparable. So we need international help to sustain. That's definitely obvious truth. But like when there are interruptions in this support, we could manage to live during these episodes quite well because we have a lot of like international reserves in our coffers. There are like there is metrics of sufficiency of reserves under IMF standards. We are above 100% now, so it's quite good sign. That's good, but we still need international support anyway.
Thank you. Volodymyr, thank you so much for your time. Please applause our speaker. I'll take your microphone. Thank you, Volodymyr, so much.